So, Grant, it's an honor to have you. I'm really humbled. It's a great pleasure for me having you on my show. So, how's it going?
Well, look, it's my pleasure too. This is great. We've been trying to do this for a long time, you and I. So I'm glad we finally got a time that works for us both.
Yeah, definitely, definitely. Do you speak any German, by the way?
You know what? When I grew up in the UK, my best friend, who to this day is still my best friend, he lives in Turkey. His mother was German, and she used to try and teach us German. So I back in the day, ein bisschen, but today it's schlecht.
No, it isn't. I think we can switch to German right now if you want to.
Well, hey, we can. We'll get as much sense out of me in either language, I suspect.
Alrighty. Okay. So you started the podcast. It's called The Endgame, and your co-host is Bill Fleckenstein. And I really have to recommend to every viewer on this channel, you have to check it out. It's amazing. I will definitely put a link in the show notes. Of course, also your Twitter account is definitely worth following. So what's your end game, and actually, are we in the end game?
Well, it's interesting you asked that. I mean, Bill and I have been talking about this on and off for years. You know, how does this end? This situation we're in now, how does it end? And I think our second guest, a guy called Mike Green, who's just a supremely bright man and a good friend, he came on. The very first words he said was, "Well, of course there is no end game." And he's right. Of course he's right. There is no end game. This doesn't end. But so what we're trying to really find out is the transition from here to there, from the now to whatever comes next. And so in trying to think about the end game, what we're really trying to do is figure out what comes next when this particular monetary system fails, which it's on the brink of doing and has been for a number of years now. And so that's what we've really been trying to do. Look at that potential transition from every angle we can, whether it's from the markets, whether it's from inflation, the bond market, volatility, geopolitics, whatever it might be. We're just trying to come at that question from as many different angles as we can with the smartest people we can find, and just kind of share ideas and hopefully give people something to think about, because there isn't an answer to that question. It's just a matter of, okay, where do we go from here, and how do we get through that transition and best protect ourselves in whatever comes next?
So we're doing the same thing, actually. Perhaps I copied you. Yeah, because the intention is the same here on my channel, to get people and get prepared for everything what's coming. Yeah. And I think the monetary system is definitely at the end of a cycle. So, but don't you think the central banks will just keep on printing like they did the last couple of, I don't know, years?
Yeah, for sure they will. But, you know, take a look in your own country. Look at the Reichsbank. They kept on printing, right? And it didn't have a happy ending. You know, we had the Weimar hyperinflation.
Yeah, but now we have Weimar everywhere, don't we?
Well, it's exactly right. And I think, you know, what you're trying to do is admirable, because right now, you know, finance is a complicated subject, and in many cases, deliberately so. I think people in finance try to make it as complex as possible, because if finance was easy, you wouldn't need all these financial intermediaries to do it for you and take a commission on everything. So we've been fortunate for, 40, 50 years in that the man in the street hasn't really needed to pay too much attention to the world of finance. You know, markets have generally gone up. We had the 87 crash, which was kind of short-lived, but shocking. We had the dot-com bubble. We had the 2008 credit crisis. We've had some minor debt crises in Europe. And obviously these things are getting compressed, and they're closer together now. And that's why it's now important for people to kind of take control of their own, not necessarily their own finances, but their own understanding of finance, and really try to learn what they need to learn to make the right decisions. And that decision may simply come down to, who am I going to entrust with my financial well-being? But I think with what's happening now, the answer to that question today is very different to the answer to that question 5 years ago, 10 years ago, 15 years ago. And so I think it behooves everybody to sit down and dig into this complex subject and try and understand as much of it as is important to them personally.
Yeah. So the solution of the central banks were, with the last crisis, always the same. They just printed more money. Every time more money, and lowered the interest rates. Right now, we have the lowest interest rates in history, actually. And in 2000, after the dot-com bubble, they printed like a couple of billions. And now we talk about trillions, you know. And many people ask themselves, they just keep on printing? Isn't it this the solution? They buy everything, then we have the planned economy, and the central banks buy the ETFs and the equities and everything, all the debts, and then one day it will just go poof. Like MMT is big now, right now in the States and everywhere. So will they keep on printing? What's the solution? What's your thought on this?
Well, look, yes, they will keep on printing, because at this point they have no choice. I mean, they have gone down that road. They've lowered interest rates essentially as far as they can to the zero bound. We've seen some experiments with negative interest rates. Prime rates take place. Some are still there. Most of them have been rejected by the market. That being said, we have close to $20 trillion of negative yielding debt in the world, which is remarkable in and of itself, particularly when you look at somewhere like Greece that has
Portugal,
negative
Spain, Italy.
rates on 3 years. I mean, it's extraordinary what's happened. Yeah. But do they keep printing money? Yes, they will. And the argument will be, well, look, it's worked so far. We've saved everything. We've saved everybody. We've saved the world. And some could argue quite credibly that they have. They did save the world by doing this. But of course, that, like everything, has its finite lifespan. And what you do when you corrupt, and I mean that in the literal sense, the cost of capital, which is at the very base of every financial transaction that goes on in the world, when you corrupt that key ingredient, you corrupt everything that stems from it. And yes, it takes a while for these things to come home to roost. And at the moment, the representation of that policy has been in skyrocketing equity markets and skyrocketing bond markets and skyrocketing asset prices.
Everywhere.
Yeah, so no one's really that upset about it, because anything they own is basically going up.
Exactly.
And that's great. But we get to a point now, I think, where the debate about whether we're about to enter a secular inflationary cycle becomes much more important. We haven't had inflation really since the 70s in a general sense in Western democracies. And there have been many, many false dawns. People have been worried about inflation after 2008. It didn't happen. And most of that was because of the transmission mechanism. The money went to Wall Street, didn't go to Main Street. Now, because of the way the taste that left in many people's mouths, the aim is to get the money to Main Street. And we've seen a lot of these programs in the US and the UK and Europe, particularly Germany. In fact, Germany done a phenomenal job of protecting the Mittelstand and putting this money into small businesses. But of course, if you think that works as a continual exercise, it doesn't take much critical thought to realize that it doesn't work that way. We can't just print money and give it to everybody and expect the world to function properly. So at some point, the natural forces that dictate markets between human beings are going to try and reassert themselves. And I think the key question that everybody really needs to think about is this inflation deflation one, because we've had deflation essentially for 40 years. It's been a deflationary environment, and globalization has been a big driver behind that. What we see now is globalization being wound back, as countries who are struggling starting to look inwards and look after their own people first, which is always going to happen. Domestic politics always trump foreign politics. And it's never been more important for governments to look after their own people. So that force is being unwound. We've had China as the deflationary force on the world, also struggling. They're starting to become potentially an inflationary force. And the deflationary outsourcing venues that are left aren't as big as China. They're not big enough to maybe continue this trend of lower prices. So if that's true, if we have finally, after 40 years, reached the point where deflation it's not going to go away overnight, but if it's now starting to have its grip loosened on the global economy, as would make sense, and there are plenty of signs that that's happening, then as an investor, you have to look at how you've been invested for the last 40 years and realize that the world is going to behave essentially in the opposite manner. So you're not going to want to be in bonds, right? You might want to be in equities nominally, but only if they outpace inflation. You want to be in real assets. You want to be in base metals. You want to be in precious metals. You want to be in real estate, as long as it's not bubble price real estate. People have to really think about this very carefully, because the simple answer, which is buy index tracking funds and put all your money in those, and bond tracking funds and go away, has worked dangerously well for a long time. So, people need to understand what a switch to an inflationary environment will mean for them personally and their portfolios, and then work out, okay, how do I best try and mitigate those forces on the assets that I've spent the last 40 years less trying to accumulate.
Yeah. So we had inflation definitely on the asset prices. We saw the stock market go up. We saw the real estate market go up. So actually we had something like the universal basic income for rich people. You know, they didn't have to do anything. They just got richer and richer. It was pretty easy for them. Now we're talking about inflation like food prices. You know, when the people outside see bread, water, everything is getting more expensive. And then we have the biggest bubble in our lifetime. It's the bond bubble. Like you already mentioned, we have like $18 trillion of bond yields in the negative territory. And the big winner of an inflationary system is definitely the government. So if they have debts and we have inflation, then hey, they're fine. Actually, because then all the debts will go away over the time. So the big winners, we pay the price, and the governments like Germany say, perfect, we made everything right.
Right.
So
yeah, look, it's very true. Yeah, it's a great point.
Yeah, and then you have to, like you already mentioned, we have to think about which is the fastest horse in the stable. What kind of investment makes sense? You know, for example, I would imagine if inflation comes, tech is over. You know, the tech bubble, the FANG bubble, will burst finally, and then we will see perhaps a switch between growth to value. I'm a big fan of mining stocks. I think mining stocks will perform the next decade just perfect and will protect your purchasing power. Like you already mentioned, precious metals, gold, silver. It was always money, and we see central banks still buy gold and silver as a life insurance for the purchasing power, and people will do that as well. We talk about Bitcoin, we talk about real estate, we talk about diamonds, whatever, or old vintage cars or Rolex. So we see perhaps another bubble in this area, that people get more and more into real assets, like you already mentioned. But yeah, what do you think? When will the stock market crash, or when will the whole system go and burst?
Well, obviously the when is the most unknowable thing, and people should really try very, very hard to not ask themselves that question. If you get caught up in the when, you create an awful lot of problems for yourself, because if you think you know when, I guarantee you don't. You're guessing. Nobody knows when, right? But if you get some degree of confidence around when, you tend to position yourselves for that time. And when it doesn't happen and things go against you, you panic and you make dumb decisions. And that's what everybody should guard against. What we're talking about here, if we're right, is a secular change. And so you can change your stance, you can change your bogey that you're trying to beat, and you can do that for the next, well, let's be conservative, 10 years. You can take a 10-year view that inflation is going to come back. And right now, you are able to do that with all the things that you need essentially to protect yourself at perfect prices. Now, they may go against you for a while, but if you take that 10-year view, and you know, Fred Hickey, who was the most recent guest on the Endgame podcast, talked about this. You know, he looked in 2000 after the tech bubble burst at what he thought the response was going to be by central banks, and he realized that money printing was going to be the problem, and that he had to protect himself and protect his wealth from those policies. And that's what led him to gold and precious metals mining stocks. And obviously, since 2000, they've outperformed the S&P, I think, by 6 times. But it wasn't a trade. This was, to him, a secular shift. And his positioning was something that he did for a reason. Now, he trades around it, but his core position was established 20 years ago for a 20-year time horizon.
Wow.
And I think doing that allows you, and understanding that it's impossible to know when these things happen, but doing that allows you to be more comfortable being wrong in the short term, and it stops you from making mistakes based around short-term P&L fluctuations, which is very dangerous. You know, if inflation is going to be a problem for 10 years, then if you're down in the first 3 months, that's not necessarily a problem, unless you're so focused on the short term and you can't stand being down. And most of that comes from the fact that you think you're wrong because you figured, well, it should have happened by now. So it's a very dangerous thing to do, is to ask that when question. Right now we can ask the what question, which is what's going to happen. And we can ask the how question, is how should I deal with that for my own well-being? And only once you've answered those two questions do you ask the when question. The when really is, do I think I need to take steps now because I feel that something is going to happen imminently? Or do I have 6 months, a year to maybe turn this ship around and get myself positioned accordingly?
Yeah, I always say it doesn't matter when it happens. You just have to prepare now, because the time frame is getting, I think, it's getting smaller and smaller. And the other thing is, you have to protect your wealth, your purchasing power right now, because you never know when it's happening. And I always say we run a marathon. It's just not 100 yards or something. It's like a marathon, 42 kilometers, and it doesn't matter if you right now perfect, well prepared, or in 6 months. It's just start right now. And like you said, perhaps next 3 months the mining stocks or real assets go down, but it doesn't matter on the long term. So you have to be a long-term investor. And I think the same. We see now the shift between two new cycles, and we at the end of this cycle right now, and we see it. The central banks and the politicians are totally desperate and try to keep it alive. So, but it doesn't. We don't know how long they will be successful. Perhaps 1 month, perhaps 1 year, or perhaps 10 years. Nobody knows, but we will see. So, but the question is right now to you, Grant. Do you think the crisis started before Corona already?
Oh yeah, look, I don't think Corona isn't the crisis, right? Corona is basically exposing the weaknesses that we had in the system. Yeah. So no, I don't think Corona is the crisis. It's an accelerant to a crisis that was already brewing. And look, if you look at central bank balance sheets, we've had another $12 trillion printed since March. And what has that really done? If you look at the world economies, okay, they haven't all imploded, but you look at unemployment still high, economic activity is low, GDP is low, it's bouncing back, but the world is nowhere near where it was. The only things that have really benefited are asset prices, are equity markets, which are dancing along at all-time highs. And why are they doing that? Because they are convinced that no matter what happens, the central banks will come in, flood the system with liquidity, and that will be great for asset prices. So what happened with the coronavirus is it sped up the printing. It's forced the central banks to print quickly and early, and it's forced governments to apply fiscal stimulus as well as monetary stimulus. And we've seen that in some of the steps being taken, particularly in my home country, the UK. You look at the promises that have been made in terms of wages that they're going to be paid and for how long. And Rishi Sunak, the Chancellor of the Exchequer, has done a good job. But he's done the only thing he can do. He was very fast onto it, and he made all kinds of promises that he kind of needed to make. But now we've reached the point where, okay, talk turns to how you're going to pay for it. And with the borrowing that the UK has done, they're in a world of hurt. And so they're either going to have to continue to print more to keep the economy going, which is going to be reflected in the country's finances, which are already dire, or he's going to have to wind the stimulus back, which is going to create havoc, or he's going to have to find another way to pay for these things. And the only way he can really do that, given the poor economic activity, is taxation, is higher taxation, whether it's income tax, whether it's wealth tax, whether it's capital gains tax, and all these things are being talked about. And so I think another thing that people are going to have to realize, and certainly have a plan for, are capital controls. Capital controls, I suspect, will be necessary in many countries at some point. Again, we've been used to those being things that we read about in places like Argentina and the Middle East and the places in the Far East, not European and American democracies. But they're a solution to a problem that pretty soon every one of those major economies is going to be facing. Central bank digital currencies are being rushed into the fore as fast as they possibly can, because they give central banks a way to impose capital controls in effect. And the question I keep asking people, I said, if central banks could impose central bank digital currencies tomorrow, do you think they'd wait 24 hours and do it the day after? No, they wouldn't. They would do it tomorrow.
exactly.
So all these things they're coming because they don't really have a choice at this point. They have to find a way to capture capital, to tax it, and to put money back in the kitties out of the pockets of the people that have assets. And so that's a very dangerous environment for people who have assets right now.
Yeah, definitely. It's an exciting time. You're a big fan of the book Fourth Turning. So
Yes.
may you break down the book Fourth Turning for us just in a nutshell?
In a nutshell, look, Neil Howe, who's a good friend of mine and a fantastic author and an incredibly gifted communicator, he and Bill Strauss wrote this book back in the 90s, taking a historical perspective about long-term cycles. And they identified that throughout history, you get these 4 cycles, and the fourth turning is generally a turning that happens when systems collapse. And after the fourth turning, we get to the first turning again, and it's an incredibly bright and incredibly positive time, but you have to get through that fourth turning. And fourth turnings are characterized by financial collapses, by war, by conflict, by political disruption. All the things we're seeing now are characteristic of fourth turnings. And so if you read the book, and I would implore everybody to do so, it's a fantastic read. It'll probably take you a couple of reads to really grasp it. And I would advise you to have a highlighter pen, as I do. My copy's sitting over there. And every time I go through it, I highlight more and more passages. But to get through the fourth turning is to navigate extraordinary turmoil. And if you think about the turmoil that we feel we're going through at the moment, it's everywhere, right? It's left and right politically. We see that everywhere. It's capitalism versus socialism. And it's male versus female. It's woke versus traditional. But most importantly, I think it's old versus young. Because old versus young is not just an age disparity, it's an asset disparity. The boomer generation have accumulated extraordinary wealth because they've had this fantastic tailwind through no fault of their own, just pure good luck. And the millennials and Gen Z have come in at a point where they're supposed to be accumulating wealth of their own. And it's very difficult for them to get on the housing ladder. It's very difficult for them to afford to do the things that the boomers and to some extent the Gen Xers were able to do. And so with the political power all being essentially in the hands of boomers right now, you're starting to see you're starting to see millennial politicians coming through and making some noise and talking about the things that are relevant to their generation. There is going to be a handover of power from the generation of haves to the generation of have-nots. And what happens when that happens is fairly inevitable. We all know that the people who represent their constituents are going to do things that are popular with their constituents. So this wealth transfer is coming. I mean, whether you like it or not, and that's another big part of a fourth turning. It's a question of how peacefully it happens, because nobody gives up what they have voluntarily unless it's at gunpoint. And so that's, these sound like crazy things. I did a presentation in January of 2015 called The Consequences of the Economic Peace. And in that, I talked about the history of war, and I talked about the likelihood of there being another war. And the first question I was asked in the Q&A afterwards, this was in Oslo, was, are you saying there's going to be a war? This was 5 years ago. And I said, no, I'm not saying there's going to be a war, but what I'm saying is there's not going to be a war. And before now, you were pretty certain, you said that we're not going to have another major conflict. But I think anyone that says that and writes off a major conflict, whether it's international or it's a civil war in the United States, for example, or in Germany or in the UK, if you write that off now, the same way you did in the 1980s and 1990s when things were on a clear uptick and had a tailwind, I think it's a very short-sighted thing to do.
Yeah, actually, I wrote in my books about a civil war in the US one day, because I think it's so much hate between all these people. Doesn't matter black or white, religious, BLM, whatever it is, gay, transgender, everything. And this country is deeply separated like never before. And I think this could be, for example, a war. So, but let's get back to the fourth turning. So the book says right now we're in the fourth turning, the age of turmoil and a big change. So when did it start and how long does it last?
Well, if you look at Neil's work, I mean, the 2008 crisis was really the first, I guess, major event of this fourth turning. And if you look at it, what's happened, that crisis in 2008 has very much colored everything that's come before. Everything that's happening now is as a direct result of the response to that crisis. And the crisis was one which built up and under its own weight imploded. Everything since then has been desperately trying to keep this system together. So before the 2008 crisis, the Fed had some $700 billion on their balance sheet. Now they're at 7 trillion and climbing fast, right? That's because of 2008. The problems that created 2008 haven't gone away. They've been moved onto the Federal Reserve balance sheet. We didn't fix the problem. And so it's very important to understand that this fourth turning is a force of nature that is going to continue to push until those forces have their way, and man can stand in the way of natural forces for a while. You can put up walls against the hurricane, but eventually the hurricane's going to tear your house down. King Canute tried to hold the tide back, and he was successful for a while until the tide came in and swept him away. And so these are natural forces. And so if you think about trying to subvert natural forces by monetary policy, it's really kind of a farcical construct that you could stop this from happening just by printing pieces of paper out of thin air that we all agree have a certain value, and saying, well, instead of give us your poor, you're tired, you're hungry, you're huddled masses, give us all the crappy bonds you have, and we'll take those off the market and we'll steward them for you. It just doesn't work. And just because something's worked for a while doesn't mean it's a long-term solution. And so the fourth turning is the natural force that will ultimately expose these problems and demonstrate to the world just how big a problem they are, and just how pernicious they are, and just how dangerous they are. And it's a matter of time, unfortunately.
Mm. So, and we are on the halfway of the fourth turning. Are we in the middle of it or at the end?
Well, yeah. I mean, look, it's not precise. These aren't precise methods, but we're somewhere in the middle. I think, if I remember rightly, 2025 should be when we exit the fourth turning, but that's not to say it doesn't get pushed out. I mean, in the US Civil War, which was a famous fourth turning, they didn't have the monetary means at their disposal that they have now. They were on a gold standard. They had different problems. Yeah. So look, they've extended this to some degree. I would argue that the means of that extension has just stored up the force of the problems that we're facing. But look, I think it's important for people to understand that it's not an unescapable problem for people on a personal level. It just requires some thinking. It requires that you entertain some previously unentertainable ideas about catastrophic outcomes, and you prepare yourself for them. And being prepared is the best thing you can do. And to be prepared, you have to read, you have to understand history first and foremost, and you have to realize that outcomes that were completely unthinkable over the last 40 years, but have happened before in history, are absolutely possible again now. So you need to think about those extreme outcomes. You have to think about the kind of outcomes that a return to significant inflation might lead to, and then think about a solution to that. And it doesn't need to be canned goods and guns and it doesn't need to be those kind of extreme things, but it needs to be a thoughtful assessment of your portfolio, a thoughtful assessment of the assets you hold and whether they will protect you from an inflationary outcome, from a government desperately looking to scrape up taxes wherever they can. These are the problems you're going to face.
Yeah, definitely. They will tax everything, that's for sure.
They have no choice at this point.
The question is if the governments fall to the left or to the right, we will see, but the outcome is the same actually. So they will tax you, they will confiscate some stuff, I guess, and perhaps something worse. But at the last 3 fourth turnings, it always ended with a war. So do you think we will see another war?
Well, look, at this point, it's really a question of how do we avoid a war? Because you can see, as we talked about that conflict, there is conflict everywhere and it's escalating.
Yeah.
So when we talk about a war, traditionally we think of a kinetic war. We think of World War II. We think of Vietnam. We think of the grainy footage of World War One. Warfare will be different. If anyone that's been paying attention to the Armenia-Azerbaijan conflict will realize exactly how warfare has changed. That war has been remarkable in how it's been fought, how quickly the Armenians were forced to surrender by a country that they beat on the battlefield handily a couple of decades ago. There are many lessons for people in there about what warfare means now and how it's likely to play out. So war is this kind of abstract concept. We need to broaden our horizons about what a war is, because boomers versus millennials could turn into a war. Not a gunfight war, but a war of people who have power, who have it, and people who want it. And the stakes are so high now, given the fact that the boomers have all the wealth, and if you're going to tax people, you can only tax the people that have the wealth. So the boomers are in the firing line, and if you think they're going to give that up without a fight, you're wrong. We've got China challenging the US for supremacy, and there's enough been written about whether that's a pipe dream or whether it's a real threat. It's not going to change. They're going to continue to do that. The latest 5-year plenum in China, they declared that they were seeking military parity with the US by 2025. The US has an unwritten rule that they want to have at least twice the capability of the nearest foe at all times. So right there is a potential arms race just staring us in the face. You have Xi Jinping, who's not going anywhere for the foreseeable future, a very autocratic leader, a cult of personality, if you like, who is in charge of, no matter which way you cut it, the second most powerful military on earth. So this idea of a war and the ease with which people dismiss that as an idea because they're thinking about World War II and countries invading other countries and boots on the ground and what have you, that isn't necessarily what war is going to look like in the 21st century. But war in terms of a conflict that escalates and both sides are left with very bad choices to make is a reality that I think everybody has to face up to right now.
Yeah, I think everybody agreed with us. Since 2008, I think this was a game changer with the financial crisis. Things changed, we trusted the banks, and then out of a sudden we saw a lot of banks were corrupt and they manipulated the LIBOR interest rates and everything, actually. The commodity prices, JP Morgan, Deutsche Bank, they paid billions of fines. And afterwards we realized we had a loss of trust even in the politicians, because the politicians which we voted for, they didn't protect us, the men from the street. They protected the banks who created the whole mess in the subprime crisis. So we saw tendencies that people voted for left or right-wing parties, especially in Europe. That's why even Trump came to power, I guess. And then the next lose of trust was when in the media, the media, people didn't trust them anymore. So we see since 12 years now that people lose the trust in the system, and that's what I think it's the fourth turning. And now we see people going on the streets before the corona crisis. We saw it in Chile, we saw it in Argentina, we saw it in Lebanon. Everywhere people went out in the streets. In France, the yellow vests, and everywhere people were not happy anymore because the capitalism didn't. But they couldn't afford a house or a retirement fund because everything went up in the price. So what do you think? Do you think the corona crisis is the climax of the fourth turning?
No, I think if you think about what you just put there so eloquently, there's one thing that so far people haven't lost trust in. And this is the most important thing to understand, and that's money.
Exactly.
People haven't lost trust in currency. Yeah. And that's the end of the fourth turning, right? When people lose their faith in money, that's when you see crazy outcomes. You look at Argentina. It's such a great lesson so many times. I mean, everybody's seen an Argentina currency crisis. When people lose trust in the money, that's when things escalate. And I think that's a big reason why central bank digital currencies are absolutely going to be with us as fast as they can possibly get them in play, because at that point, you don't have any choice but to trust the money. I mean, or rather, I should say more accurately, if you don't trust the money, it doesn't matter. You don't have a choice. You know, they can. There are so many more levers they can pull with a digital currency, in terms of who gets what, in terms of how you're taxed, in terms of what you can do with it, how you can move it outside the system. You won't be able to move it outside the system. So, I think we're in a race now between the ability of central banks and governments to institute central bank digital currencies, and people to wake up and understand what's happening. And, and I think this is a big reason why you're seeing a surge in the price of Bitcoin. I think it's why the gold price has been so strong. I think you're seeing people who are looking down this road that we're discussing today and seeing the kind of ways out they need to contemplate, and they're acting early. They're starting to think that Bitcoin is something outside the system. Gold is something outside the system. A property in a foreign country is something outside the system. And so this is the big thing for me, is this loss of trust in money. And it feels with every $1,000 that Bitcoin climbs, that amongst a certain group of people, that trust is failing quickly. Gold has been signaling the same, but it's a much less pure trading vehicle than Bitcoin. There's way more cross currents in gold than there are in Bitcoin. So I think Bitcoin right now is a simpler signal of that decaying trust. And people need to understand this for what it is. This is not about gold going to $2,000 or Bitcoin going to $20,000. This is not about the price levels. This is about the signals they're both sending. Yeah. And if you're paying attention, they're very important signals.
Yeah. Definitely. And the funny thing is, Bitcoin was actually an answer to the financial crisis. That's why Satoshi Nakamoto created Bitcoin. Yeah. That, hey, this system doesn't work anymore. It's just we create money out of thin air, and this has to stop. It's unfair. It's undemocratic. It's intransparent. It's centralized, and it's a planned economy actually. And he was so right. 12 years later, we see Bitcoin is getting more and more expensive. But it only means, and I have to explain, it only means that you have to put more paper money on the table for a Bitcoin, because they destroy the money we use, we live and work for. That's it. Yeah, that's the whole thing. Exactly. And but it looks really grim if we talk about a fourth turning, and there will be perhaps a war or civil war and a big wealth transfer. But let's give the people some positive outlook. And we have to mention, after the fourth turning, we restart the whole system with a reset, and there will be the first turning. And perhaps you may explain it to us what happens then.
Well, this is about rebuilding. It's about opportunity. It's about, once the decks are cleared and the kind of cancers have been cut away, you are left with fertile ground. And so, the first turning, the second turning, these are exciting times to be alive. And there's a chance for growth. There's a chance of reinvention. There's a chance for technological advancement, all these things. But you have to kind of clear this toxicity out of the system. You have to detox. And that's really what the fourth turning is all about. So we will get through this fourth turning. I mean, make no mistake about it. It won't be straightforward. It won't be smooth. Yeah, it won't be peaceful, but we will get through it. And what comes after that is hugely encouraging. We have no idea what it means, what the opportunities will be. But throughout history, mankind's ability to innovate and advance have been extraordinary. And technology now is just giving us the ability to innovate and advance at a faster and faster pace. If you think about the growth that the US went through after the Civil War, and then you turbocharge that with technology, I mean, it will be an incredibly exciting time to be alive. So yeah, understanding that the fourth turning is a period of time that you have to navigate makes it, I think, easier to understand, okay, what do I need to do to give myself the best chance of navigating that as safely as I possibly can, both from a personal standpoint and a financial standpoint. And as I said, it involves thinking about extreme outcomes and having a plan to deal with them. And you know, the old saw about you can't buy insurance for a house once it's already on fire is so true. I mean, it's become a little trite, but the time to insure a house is before the fire starts. And you know, there's smoke everywhere. And if you're not seeing that smoke, don't necessarily look for it in financial markets, because unless you're deep in financial markets where there's plenty of smoke, you won't see it. You're going to see a headline about new highs on the stock market. But if you look for that smoke in politics, and you look for it in society, and you look for it in the job market and in food prices, you'll see that smoke. And that tells you that there's a fire somewhere. And so you need to have a plan with how to deal with it.
People definitely feel it all over the place. That's why they're not happy.
I think they do, yeah.
Yeah, definitely. They're not stupid, you know. And the thing is, crises are important actually for our development, for the evolution of mankind. You know, every crisis is a chance. Yeah, that's actually my next book I'm writing. It's called The Biggest Chance of All Times. And I think that's where we're heading for. And if we use it wisely, if you prepare yourself, if you prepare your neighbor and your colleagues, actually, it will be good for all of us. And after every crisis in the past, we always develop positively, you know. We went richer and richer. Capitalism brought so much people out of poverty, you know. It just helped people all over the place. So I think the next crisis is important, or the crisis we are actually in right now. But with technology and perhaps Bitcoin, you know, we will see a new monetary system, because at the end of the fourth turning, it's always important to have a new currency system. And perhaps Bitcoin is the answer. We will see. Nobody knows. But one question, Grant, to you: how do you prepare for the end game? Is this why you sit on an island, or what are you doing? Perhaps you can share it with us.
Yeah, look, for me personally, I don't pay attention to the stock market. At this point, I'm not bothered about any gains that I miss out on the stock market. You know, I'm preparing for inflation. I want to hold a lot of cash. I want to hold a lot of precious metals. I want to build up positions in companies and sectors that I think over the next 10, 20 years will do very, very well. And I want to be cautious. I think now is not a time to be greedy. Now is not a time to be chasing all-time highs in the equity markets. And, you know, if that means I miss out on Google and Facebook and Netflix and all these, and Tesla, God forbid, I'm absolutely okay with that. And everybody else needs to understand that that's what you have to do. You have to be comfortable with the way you position your portfolio. You know, FOMO, fear of missing out, is one of the most dangerous things, and it's something that everybody has a weakness for. You know, you see your neighbor making money in his call options on Nvidia, and you get jealous and you chase things. And I think that's why having a long-term plan, having a long-term understanding of what you think the environment is going to be over the next 20 years, it just makes the intraday noise, which we see, and the weekly noise, and even the monthly noise, much less easier to look past. If you have an investment case that you can check and recheck, and if it's, for example, your investment case is, I think inflation is coming, well, keep checking it. Are the symptoms of this inflation that you see coming still there? For me, they're all there. In fact, they're getting worse. Is it being reflected in prices? Well, I would argue it is. I would argue it is in the cost of living. I would argue it is in asset prices. I would argue inflation is pretty simple to find in just about everything except the CPI. And the CPI is a benchmark which has always been engineered to give the lowest number possible, because there are so many payments linked to it. So if that's your benchmark for inflation, then you're looking at this the wrong way. Anyone that can tell me they go to the store today and buy the same groceries and it costs them cheaper, I want to know where they shop, because I do that every day, and I know that's not the case. So I'm very comfortable in preparing for an inflationary environment. What that means currently is that if I'm long the commodities complex, which I've been buying recently, they're not doing anything. They're not going up. In fact, some of them are going down a little bit. But I don't really care, because I'm not fully invested in that one thing. And even if I was, I'm looking at them to perform for me over 10 years. And so I'm going to keep checking my investment case. I'm going to keep checking the signals that I'm looking for to tell me I either continue to be right or I may be wrong. And if I start seeing things flashing that say, hey, you need to rethink this, I'll adjust my portfolio accordingly. But I try not to get caught up in the daily noise, because it is noise.
Yeah.
It's noise, and the noise has never been noisier, if that makes sense, because of social media, because of the interconnectedness of everybody. Everybody's got an opinion. Everybody will tell you on Twitter and other platforms why they're right and why you're wrong and why this is going to happen, why that's going to happen. And God bless them. It's great to have that information out there, as long as you're careful in which information you take in, and you're careful which information you don't discard once you've thought it through.
Yeah. So you said commodities, for example. I guess mining stocks as well, like.
Yeah, for sure.
Do you have any name you want to drop?
Look, I think anyone that wants to understand the mining stock should listen to the Endgame podcast we just did with Fred Hickey. Fred is someone who is all over these stocks, and he talked about a bunch of gold mining stocks, all of which, funnily enough, I do own. But he talked about them and went into detail as to why they are.
I will put a link down in
right now.
The show notes, definitely. It was great.
Yeah, and I think, as I said, the beauty of the ETF world we live in is, if you want to make a bet on commodities, you can do that now with ETFs. You can buy agricultural ETFs, you can buy base metals ETFs, you can buy ETFs that replicate the Bloomberg Commodities Index. So it's a very simple way to make that bet. You don't have to be in the futures pits. You don't have to be holding physical commodities anymore. It's a really simple thing to do. And that is one of the huge technological advancements. You can be long commodities now, and a nice spread, which gives you exposure to that part of the world, and that is phenomenal. And so hopefully people will look at that, pass their way through. Now, the obviously other problem is there are so many of these things that you've got, you're spoiled for choice. You have to try and find the one that fits what you
it's
think
like a kid in a candy shop. Like,
but
where do I start?
ETFs on the broad commodity index is a great way to start.
Yeah. So we already talked about bonds. You are not a fan of bonds, obviously, which is totally right. What about cash? Because I was listening to one podcast you had with Jim Rogers, who was on my channel as well, and he will come back as well. And he favored US dollars. So I think I go with Ray Dalio, who says cash is trash, definitely. So do you believe in cash? You have cash?
Yeah, look, I think if you don't have cash at all times, I think it's a very foolish position to take. To be fully invested. And there are times when you want more, and there are times when you want less. But the question becomes, how do you hold that cash? For me, I think of gold as a cash liquidity reserve. I don't think of gold as a trading vehicle for me. If I want to own paper currency, well, I know that they're all going to be debased against one another. The only things they're not going to be debased against are things like gold and silver, and thus far Bitcoin. So I hold a significant portion of my cash reserve in either physical gold or in other vehicles that give me exposure to the gold price. I hold some US dollars because I think it's still the best of the fiat currencies for now, but I don't hold that because I think the dollar's going to get stronger. I think the dollar, like all of them, is headed much lower, but I think it'll probably head much lower at a slower rate than some of the others. Singapore dollars, I think are okay. I have held some pound sterling over the last sort of 6 to 8 months, but I try not to time these things, because if you want to get into timing currencies, it's something you have to pay close attention to a lot more than I want to. So I just take a broad cash allocation, which right now is not as high as it has been, but it's still pretty high. And I'm very comfortable with that.
Okay. Yeah, it's important to sleep good at night.
Yeah,
so what about silver?
Right.
What about silver? You have physical silver?
Yeah, I do. And a silver is, again, it will do a good job protecting you through periods of inflation. But if you just want pure protection, then gold is a much less volatile way to do that. If you are convinced of your thesis, you are convinced about inflation, you're convinced these things are going higher, silver offers you tremendous leverage to gold. If you want to be protected and maybe capture more on the upside, then silver offers you a great way to do that. But look, it's not for the faint of heart. I mean, if you just look at a price chart of silver, or look at the hair of anybody that's traded silver, as you'll see, you won't find many. You won't find many dark hairs amongst those people. So,
and I'm 27.
Again, yeah, right.
Why do you laugh?
Listen, we've all been there. Don't worry. It's only going to go one way from here. I'm afraid. I hate to be the one to break it to you.
Yeah.
But look, it comes down to anytime you invest in anything, understanding what your objectives are, understanding what you expect that investment to do, and understanding how it trades. You know, if you think silver is going to be a nice, quiet way to be long precious metals, it's not. It just isn't. Gold is going to be a much quieter place to be in the precious metals. If you love volatility and you want the kind of turbocharged properties that silver gives you, great. But understand it. Understand what you're going in for, because that will make the challenges, and there will be challenges, easier to bear, because they don't catch you by surprise. You're expecting that volatility, and you won't be forced into puking out a position on the first day that it falls 5%, because with silver, that's just a Wednesday.
Yeah, definitely. That's why I always recommend a diversified portfolio, gold and silver. You should own both, actually. So let's talk about digital gold, Bitcoin.
Yeah, look, I get asked this all the time, and I demur, because I'm simply not the right guy to ask about this. You know, I have an understanding to a level on Bitcoin. It's something that Bill and I are going to address in the Endgame. So I've been reading more about it. I think the best way to put it is there are questions that I have about Bitcoin.
Well, we can talk about it. I write a book about Bitcoin. So.
Yeah, no, I understand that. But there are questions that I have yet to have answered satisfactorily to me, for me to be one of these evangelical voices for it on Twitter. But I'm totally open-minded. I'm not in the Bitcoin's a Ponzi scheme camp. I understand its value. And I think being a gold investor gives you the ability to understand a lot of the positive properties of Bitcoin naturally. I totally understand it. Yeah. But I do have questions around what governments will do about it, about some of the problems with the anonymity, some of the problems around I understand that the network isn't really hackable, but I want to understand more about the difference quantum computers make. I want to understand more about forking. You know, there are lots of things that I want to understand more about, and I will do that. I will, in my own time and in my own way, try and get those questions answered. That's something that I realize is very important. And I'm fortunate that there are some extraordinarily gifted communicators out there in the Bitcoin world, which is great. So for me, it's a personal journey of understanding it, but having questions and trying to get those specific questions answered to my satisfaction, so I'm more comfortable with the things that I see as potential Achilles heels.
Do you own some Bitcoin?
Tiny.
Okay.
Tiny amount. And I say I'm not. It's a meaningless allocation, frankly.
Okay, you have to change this. You have to change this.
No, look, which is what everybody who owns Bitcoin tells me, and I, it's funny being in the precious metal space for as long as I have been and associated with that world. You know, one thing I've always tried to do when I've talked about gold and silver and I've given presentations on it and I've written about them is avoid being one of these guys that bangs the drum and says, you don't understand, you've got to do this. Because for me personally, that's the quickest way for me to tune out. I don't want to be preached to. I want thoughtful discourse. I want to ask questions, have thoughtful answers. I don't want to be told, you're an idiot if you don't do this, because it's just not intellectually strong for me. So I tend to steer away from the people who tell me you're an idiot because you don't understand Bitcoin. And unfortunately, that world on the internet has become very toxic. You know, even crypto guys are going against each other, and there's the maximalists, and they all seem to hate each other, and all that stuff. It's stupid. And that's just, look, it works for people. It doesn't work for me, and that's the worst way to engage me. So I seek out thoughtful people, and I ask what I hope are thoughtful questions. And you know, if they can give me an answer that deals with my concerns, I'll tick that one off and I'll move to the next one. And that's That's how I've always tried to do things.
Same with me, Grant. That's why I'm writing a book about Bitcoin to make it more understandable. And in 2011, I'm a consultant as well. A client came to me and he said, "Hey, I want to buy Bitcoin." I was like, "What the fudge is that? Funny money from the internet? No, it's a scheme. It's a Ponzi scheme. Don't do it. Your money will be gone." And then 2 years later, I wrote my second book. And then I said, "Okay, Bitcoin, it's interesting. It's charming. I liked it. But it wasn't for the people on the main street, because it was really weird back then. It was still an experiment. But last couple of years, I think it developed. It got more mature, and I think it's a big opportunity as an investment. But I don't like this hysteria between you only are into Bitcoin or gold or whatever. Actually, I think it's like big brother and little brother. It's like a bridge between both of them, because they both sound money, and with Bitcoin, we know it's only 21 million units one day. We don't know how much gold is in the earth, in the ocean or somewhere. And people try to understand it, like Ronnie and Marc, for example. They started a crypto fund. It's working well, and they're open-minded. And I think you should always be open-minded, because in 2011 I wasn't open-minded. I was like, now it's working for me. Don't. But then I read the white paper in 2013 in the middle of the night, and I woke up my wife and I told her, tomorrow the first thing I do, I buy Bitcoin, because that's it. It's punk rock, actually. I was totally on fire, and still am, because I think it's a big opportunity for people, a game changer, to get financial independent and to be part of a revolution, actually. Because I think Bitcoin or digital currencies will be the futures, like you already mentioned. The central banks try to create their CBDCs but in a negative way, to control us, to tax us, to have everybody under control, I guess, like 1984, Huxley or Orwell, but Bitcoin is actually something like a big chance for us.
Well, look, we'll see. And one of the big questions that I have personally is there's understanding that governments don't allow competition when it comes to money. It's as simple as that. And that's for me, that's the big one that I want. I want an answer. And so far the answers I've been having, they wouldn't do that, and they can't do that. And I've yet to understand anyone tell me why they wouldn't do that, because, they can tax it. Well, maybe. But it seems to me, if you look back through history, as we've been talking about through the course of this conversation, people who want to compete with a government in issuing currency tend not to fare very well. So, and again, I'm not saying it won't happen, but that's a question that I want answered to my satisfaction before I'm really going to dive in and say this thing has the future that I understand so many people see that it has. Yeah. But I have other questions as well, but that's a story for another day.
Yeah, definitely. What do you think about real estate?
Again, look, I think particularly productive real estate. I think buying condos off a plan is perhaps a game that's been played out too far. I think having productive real estate, commercial real estate could be problematic given the number of stores that are closing. So I think, like everything, it's a real asset, but you have to make sure you are buying a real asset that isn't priced either for perfection or beyond perfection. It hasn't kind of had this tailwind we've seen. And you're not paying over the odds for it, because I'm a great believer that you make all your money when you buy something, not when you sell it. If you buy something at the right price, you make it so much easier to make money. And so real estate is such a broad spectrum, and it's not easy to buy real estate. You have to understand what kind of real estate, which jurisdiction, what kind of zoning is it? Is it retail? Are you buying it for a yield? Are you buying it for capital appreciation? There are so many questions that real estate as an asset class is an incredibly diverse thing to kind of lump in together, I think.
Okay, awesome. So last two questions. What was the most important book you read beside Fourth Turning?
I think for me, there are probably more important ones in my life, but I think the one that I've talked about the most in the last sort of 10 years or so is The Lords of Finance by Liaquat Ahmed. It's an extraordinary read, and I think anyone that reads that will find so many clues about the world we're living in now. I mean, there are entire chapters that you can read in that book, and you can change 3 names and it reads exactly like the news today. It's a remarkable piece of work. It won the Pulitzer Prize back in 2009, I think it was. And justly so. So The Lords of Finance by Liaquat, Liaquat, Ahmed, Ahmad. And I can't recommend that book highly enough. I've read it probably 4 times, most recently back in August. And at which point I actually also read 1984 again. And whilst I wouldn't say that has been one of the most important books of my life, reading it again now, it makes you see it in a whole new light. So I think it behooves all of us to read as much as we can. And for me personally, I think history is the most important thing to read, because it's the answers are all there. There's nothing new under the sun, as Ecclesiastes said a few thousand years ago, and he's absolutely right. The answers to all the problems we have today are in history, even Bitcoin probably.
Yeah, definitely. Yeah. I asked my followers on Twitter, what should I ask you? And actually we covered everything, but funny thing is it really exploded. I like that. So people were really keen on getting in touch with you or ask you a question. So, but my last question to you, Grant, is what is for you the sense of life?
A sense of life.
Because we talked about money and stocks and
no, it's not. It's for me, honestly, it's family and friends. It's family and friends. It's my kids. I've been fortunate over the years to meet some extraordinary people all around the world. I've lived and worked in 7 or 8 countries now, and I've been fortunate to make remarkable friends wherever I've been, and I hold those friendships incredibly dearly, and I do everything I can to maintain and strengthen those, because what those people have taught me over the years, not just about life or about finance, but about myself, is priceless. Yeah. So I think, surround yourself with as many good people as you can, and always try to learn from them. Shut up and listen is
that's why you're here. That's why I invited you. And priceless is as well your podcast, and you invite your old dear friends, and it's really a pleasure to listen to it. I really can recommend everybody to listen and subscribe to The Endgame from Grant Williams and Bill Fleckenstein. It's a remarkable job you're doing, and it's so much insights from all these bright people. It's just amazing, and that's what I tried to copycat now here with you, Guy. I hope you enjoyed the show as much as I did, and I hope to invite you as soon as possible again, Grant.
Anytime, Mark. I've really enjoyed it. Thanks so much for having me.
Thanks. Bye.